Over the last 100 years, Farmer State Bank has been focused on providing positive customer experience and satisfaction. Farmer State Bank has implemented strategic goals that favor the consumer throughout those 100 years. So, why is it that they are forced to comply with challenging and burdensome regulations? Farmer State Bank opened in 1915 in the small farming town of Stroh, Indiana. Shortly after the Great Depression, they moved to LaGrange. I'll let Joe Urbanski, the president of Farmer State Bank, discuss Farmer's growth since then.
Indiana. Since then, the bank has continued to open new branches, mostly in northeast Indiana, and eventually opened a branch in southern Michigan. Then in 2005, the bank acquired the First National Bank of Fremont, and as a result of that, the bank had several new branches in Steuben County in Indiana. Since then, since the beginning, the bank has grown to about $750 million in assets, and the bank continues to serve all types of businesses in northeast Indiana and southern Michigan, and the bank, of course, serves consumers in northeast Indiana and southern Michigan.
In 2008, the market came crashing to its knees thanks to poor strategic decisions of large banks. As a result, the United States government rolled out new regulation to prevent these poor decisions from reoccurring. Since 2008, banks have struggled with this increased regulation. Small community banks have been especially challenged to remain compliant while keeping expenses low. Here is Mr. Urbanski again to discuss the regulatory effects on Farmer State Bank.
To start with the end of the Great Recession, there was a number of new regulations that were coming out, and the bank was really forced to increase its regulatory compliance efforts. And that showed up in many ways. We had to increase our staffing, we had to increase our training, we had to increase the use of third parties, including lawyers and consulting firms, to help us make sure that we're complying with all the new regulations. And overall, that was unfortunate for the bank because it resulted in a time period where we spent more time focusing on regulatory compliance than we were running our business and focusing on the customer experience. And I think the unfortunate part of that is Farmer State Bank feels like it's always done the right thing for its customers. And so for us to have to commit significant efforts to only focusing on regulatory compliance was a period that was frustrating for us and other community banks in the United States.
The burden of these regulations have decreased as a result of a business-minded administration as well as the passage of the Economic Regulatory Relief and Consumer Protection Act. Here is Mr. Urbanski to discuss how these changes have affected Farmer State Bank.
We have a new administration a couple of years ago. We've definitely began to see some relief in how that was moving forward. And I think that showed up in a couple different ways here at the bank. First of all, from a regulatory perspective, the examination process began to change a couple of years ago. We started to see a more collaborative approach from our examination teams. In fact, we had examiners specifically telling us that their new boss expected them to work with community banks together to make sure that we're doing good work for our consumers and not showing up for an examination with the idea that they're here to find out what evil things the bank is doing or just trying to catch us in the act of doing something that's a violation. So that was a significant improvement to the regulatory examination process. Also with regulatory relief, the overall tone has been not so much that it's reduced what we're currently doing, but at least we're not continuing to add to the things that we're trying to do. So there's been a lower rate of growth in terms of the amount of work that we're spending in the compliance area. And so that is also welcome to Farmer State Bank. We know that it will continue to be important that we comply with regulations, but we're glad to see that going forward we expect a little bit less effort in the compliance area.
We identify the deregulation of qualified mortgages as well as a deregulation of the credit waiting period and the Home Mortgage Disclosure Act, as three areas that could affect farmers. Here's TJ Kempf, Chief Lending Officer, to talk about the recent deregulation.
There was three main points, and one of them was being HMDA. HMDA was a situation where our real estate team was pretty stressed because we were going from 23 data fields to 48, and then there was also another 20 fields that were getting changed that were going to cause more stress and more time in the department. So thankfully they brought it back to the old rule, and we were able to comply with that now. And we actually just got done doing our last data scrub, and all was good. So good report. Our third-party vendor said we did a nice job, and so I think everyone, the stress from that whole situation has really helped our team, and it's helped our cause by not having to hire additional staff, and our efficiency stayed strong. The second point of emphasis was the qualified mortgages. Obviously, that rule, the ability to pay rule, really put a damper on us because there was credits outside that 43% debt to income ratio that we knew we could do a good loan with. I mean, if somebody had a 50% debt to income or 55, we knew they had the means to make the payments. We just legally didn't want to do it because we knew if we did make that loan, then there was a chance if we were to get sued in the end that mortgage could be an unsecured loan at that point, and we would lose a bunch of money and have a large charge off, and that was not what we wanted to do. So thankfully, they've rewritten the rule to make us more comfortable with this, to give us more flexibility, but I still am a little cautious of going too far past it because I'm afraid that, in the age of the consumer, that could be an issue for us down the road, and we still could see a lawsuit. So we're walking cautiously there, but still trying to be flexible. And then the third point is the waiting periods on credit offers. That was a huge one for us because our turnaround times were floating between 39 and 40 days, and now we're in that 30 to 31 category is where our turnaround times are. So that's big for the customer experience. And so if you have customers that are waiting that extra time, and you've got realtors pushing you to get the deal closed, and your customers are pushing you, and everyone's impatient. And so, obviously the biggest thing we want to do is help our customers get to the finish line and have that experience, so they're out telling everyone else, what a good job we've done, and they're passing the word along. And I think that's worked really well for us because we're the top mortgage lender in Steuben County, and we're the top mortgage lender in LaGrange County. So, we're very proud of that.
Farmers State Bank wants to remain the top lender within LaGrange and Steuben County. To do so, we identified a few areas where continued clarification and deregulation could aid them in reaching this goal. Here's Stacy Merrifield, Chief Financial Officer at Farmers State Bank, to discuss these areas.
We don't believe that we'll see much of a decrease in regulation related to the Bank Secrecy Act because many of those regulations assist law enforcement with identifying terrorists and other illegal activities. One exception may be related to banking marijuana-related businesses because of the increased disparity among the states and the federal government related to its legality. We also think that we may see some decreased focus in rules-based regulations and instead a greater focus on clear consumer harm.
Within rules-based regulation, we identified the clarification of the Fair Housing and Equal Lending Act, as well as the elimination of home appraisals required for home equity lines of credit as two major areas where deregulation would benefit Farmers State Bank. Throughout Farmers State Bank's 100-year history, they have always sought to serve their customers. The reduction of regulations have helped them return to working closely with customers to provide outstanding results. They hope to see continued reduction in regulations to allow them to serve their customers for the next 100 years.